Would you agree with him? And would you hate it, by the way, if everybody was going to tell you what you were going to do? I would hate that. That's the position they're in.
So look, I mean, is the Fed making a mistake? I don't think so. And I think the surprise is going to be the fact that once the Fed starts to raise rates, it will actually cause people to spend more. And the reason is you've seen a lot of people on the sideline thinking I have time before I have to buy a house, before I have to take out car loans, although those have picked up quite substantially.
Right.
And I actually think initial increases may actually initially precipitate an increase in spending.
Okay, and would that be enough to help the economy?
I think in the short term, yes. In the longer term, we're still struggling with a simple issue. There is no pricing power. There is no reinvestment dreams. Corporations are not seeing growth anywhere, and thus they're buying back shares, they're returning cash,
right.
And thus we're not seeing the robust growth we normally used to.
And thus you're still underweight equities, is that right?
Yeah, underweight equities,
okay.
Absolutely. There are some tactical opportunities in some of the regions, but overall, yes.
Okay, so where do you see an opportunity, though? Is there going to be an entry point at some point for you?
Yeah. So, for example, we've actually put on a small position in energy. We think the bottom for energy is around $30.
Energy stocks or oil?
Actual oil futures.
Okay, oil futures.
And also derivatives such as selling put options on individual stocks.
Okay.
We also think integrateds are actually quite interesting at this level. And the idea is not that we know exactly when the oil is going to rebound or how much. We just think at $30 it marks the bottom.
Okay.
The second area that I think is...
But before you go to the second area, why do you think it's marked to bottom?
We think that at that level of price, a substantial number of wells are going to be unprofitable on cash basis, which means they do not cover the cost of labor, cost of consumables, and cost of transportation.
Right.
And so at that point, they have to shut down, and that shutdown will tighten the capacity and bring the prices back up.
And this is you're talking about for U.S. producers? Or?
This includes the high-cost producers, which are primarily U.S., Canada, and Brazil.
Okay, got it. All right, so the second area where you see some opportunity?
Even though this is probably a lot more consensus, but I do think Europe offers some opportunity for two reasons. One, we're starting to finally see a pickup in credit cycle, meaning the banks are finally starting to land. It's still very slow, but it's happening. In Europe, more than almost any place else, small business formation is what drives employment growth, and we're seeing some early signs of improvement. Mm-hmm. And unlike US, where there are not as many deep value opportunities, Europe is still priced in some parts of the market at distressed levels. And so there's opportunity to buy cheaper stocks that tend to benefit from improvement in economic growth.
But are you buying Europe, or are you buying countries in Europe?
Actually buying Europe, but within Europe, more cyclicals and slightly smaller cap. So if I had to describe it, smaller cap value within Europe.
Okay, so Vadim, but back here in the U.S., though, as you said, you're underweight. You see some pockets of opportunity. But what if, as Steve Ratner was saying, nobody's thinking about what happens after, right? So let's say what happens after is that you raise interest rates, and and fourth quarter earnings still are kind of soft, right? I mean, we've seen them pretty soft so far, and sales aren't that great. Then what are we in store for?
And and honestly, that's almost exactly what's going to happen, because we have very high inventory levels, particularly in the retail space.
Okay.
Fourth quarter earnings and fourth quarter production is going to be very weak. And we are going to see a GDP that's going to fall short of expectations.
You're confident of that? We are.
I'm fairly confident.
You're fairly confident. You sound confident. Okay.
We'll find out in a couple of months. The issue is, how's the market going to react to it? We've already seen the market kind of sell off a little bit, knowing that the inventories are high, seeing the negative earnings revisions. If you look at history, when we get into the beginning of the year, for reasons, whether they're valid or not, market tends to be a little more optimistic.
Yeah.
People tend to reward value stocks, smaller cap stocks. So I think that the fundamental news flow probably through the first quarter will be quite mediocre.
Okay.
I think the markets could potentially, stay volatile, power through that if we get a pickup in spending, as I mentioned, in housing and some other durables.